Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to discuss the recent crash that we observed in the share price of Brookfield Corporation stock. I will describe why it is crashing compared to major indices, and then I will discuss why I remain bullish on Brookfield even though everything seems to be working against this stock at the moment. As a matter of fact, I actually doubled down on my position in Brookfield and will continue to buy more shares if the price continues to fall to lower levels. Finally, I will briefly go over the recent 30F filings of so-called superinvestors who actually bought Brookfield stock during the last quarter. The list of superinvestors includes Mohnish Pabrai, who quadrupled his position in Brookfield, Akre, who added almost 30% to his position in Brookfield, and Josh Tarasoff, who added almost 7% to his position in Brookfield. I will also include two short clips of Bruce Flatt's recent interviews on his perspective on future of Brookfield, and also a short clip of Mohnish Pabrai, who recently talked about his investment thesis in Brookfield. And finally, we'll provide my opinion about these super investors towards the end of the video. We have a lot to cover in this video, so let's jump right into this. In the last month alone, Brookfield Corporation stock is down 15.3%, while S&P 500 is down only 6.6%, and S&P TSX as the index of Canadian market is down only 5.3%. So obviously in the past couple of weeks, Brookfield is underperforming the major indices by a large margin. In the last week alone, it's actually worse. The Brookfield is down 10% in the last 5 days. It's a lot. The reason we see this crash in Brookfield share price is that the market is reacting to some news about the problems with real estate arm of Brookfield Corporation. This is the news headline. Brookfield defaults on 2 Los Angeles office towers. If you read the article, this is what the panic is about. Brookfield Corporation, parent of largest office landlord in downtown Los Angeles, is defaulting on loans tied to 2 buildings. The 2 properties in default, basically part of the portfolio called Brookfield DTLA Fund, are a tower with $465 million in loans and another tower with $290 million in debt, according to the filing that they have. And finally, we have the opinion of the analysts that cover this news. This is the opinion of the analyst. We believe DTLA's decision to default on these 2 assets increased the risk for the remaining loans in their portfolio. So this is what all of this is about. Okay, the value of these 2 properties together are around $750 million, right? Brookfield has a core asset management business with more than $800 billion of assets under management. They also have a renewable energy business. They have an infrastructure business, they have private equity business, they have insurance business, they have this real estate business. So $750 million may be a lot for other companies, but for Brookfield, with this scale, this is absolutely nothing. It's less than 1% of their assets under management in just one of their businesses. It's not going to have any materialized impact on their balance sheet. In fact, in recent letters to shareholders, Bruce Flatt, the CEO of Brookfield, mentioned that they have $125 billion of capital ready to deploy. So this scenario is really interesting, and the picture that these so-called analysts are painting here are far from truth in my opinion. It's the equivalent of Nike basically closing 2 stores in some part of the world and people saying Nike is in trouble because they closed 2 stores out of their 10,000 stores. The only question here is why they do this. If they have liquidity, if they have $125 billion available, why not paying $750 million to settle the debt and move forward? Why defaulting on the loan? Well, the key here is that these are non-recourse loans that Brookfield had on these buildings. For most regular landlords or small companies, losing buildings to creditors and banks after a default would be painful. However, building structure buildings as a separate financial entities. So when they default on the debt, creditors and banks can generally only foreclose on the building and have no recourse against the rest of the company. You may ask why the banks want a deal like this. That's because there was excess collateral to loan value in place at the time of the loan being created. So basically, by defaulting on the loan, Brookfield just walk away from an asset that they do not have any interest to hold into it anymore. They don't lose much in this scenario. So that's it. That's the main reason why Brookfield share price was crashing in the past couple of weeks. They were just trying to recycle capital and move it from office buildings to more favorable assets. And as such, I'm not worried about the current price destruction in Brookfield Corporation stock. And in fact, I think this represents a good buying opportunity for long-term investors. You may ask why I'm still bullish on Brookfield, and I would say there are three main reasons. The first reason is Brookfield management team. Brookfield management team are at the top of the food chain. I think they are the best in the class. From Bruce Flatt as the CEO of the corporation to Mark Carney as the CEO of asset management business, they are master of their craft and all of them are extremely experienced. For example, Mark Carney is used to be governor of Bank of England and the governor of Bank of Canada from 2008 to 2013, and he has a PhD from Oxford University. This is an amazing and remarkable resume. You cannot find many companies in the world who can hire such a seasoned person to run a part of their business. The management team at Brookfield has an amazing track record of creating value and returning value to shareholders in the past couple of years, I would say in the last 20 or 30 years, and as such, I think the management team is my first reason to be bullish on Brookfield. The second reason is the Brookfield business model. At the first glance, you may not notice it, but they are operating as an oligopoly in asset management business in the world. If you have large amount of capital, I mean a few billions of dollars, and you want to invest that money into various assets around the world, particularly real assets like land, infrastructure, and real estate, you don't have so many options. You should go to Brookfield, Blackstone, or KKR. You have limited options to deploy those large amounts of capital for investments, and that's the definition of an oligopoly. Brookfield will use those capitals and invest in various asset classes around the world and collect management fees. And Brookfield is the best in class in terms of finding undervalued assets and allocate capital efficiently. This is a short clip of Bruce Flatt pitching the idea of Brookfield business in a conference in Middle East a few months ago, where he describes why they will be able to navigate through all sorts of financial environments due to their efficient capital allocation strategy, which worked for them in the past couple of years, in the last 30 to 40 years.
How do you actually, what's the criteria you follow when you look at a new business to do in terms of where and how and the return and even the sector?
You know, we obviously have a lot of businesses in a lot of countries and a lot of places, and we have, I crystallized our theory of business is buy great things with great people in great places. Buy great things with great people in great places. And if you follow that rule, you essentially can live through periods of time. There will be high inflation, there will be low inflation, interest rates will go up, they'll come down. We've been doing this for 35, 40 years, and we've been through, you name it, number of recessions and crises, and the bottom line, if you buy great things with great people in great places, increasingly here in the kingdom, we're going to do well over those periods of time. And that really is the success of business, but in particular with infrastructure, real estate, and businesses that revolve around it, like our private equity businesses.
And this brings me to the last reason for why I am bullish on Brookfield. Brookfield is not only invest other people's money, they also invest their own money in various assets. They are operating like an ETF with so many different revenue streams ranging from asset management, as I mentioned, to green energy, infrastructure, insurance, real estate, entertainment, chip manufacturing via their partnership with Intel, and even software business. They're active in so many areas, and the diversity of their businesses makes it look like an ETF by itself. An ETF which is managed by world-class asset managers and capital allocators. You may think, okay, this is cool, but what about the inflation and higher interest rates? Well, instead of me, let Bruce Flatt, the CEO of Brookfield Corporation, answer to this question. This is a short clip of recent interview of Bruce Flatt where he describes how Brookfield can benefit from global inflation.
So what is the real impact of inflation on those assets? If I ask you about the cost of building a real asset today compared to 3 years ago?
Look, it's and normally this is sometimes a negative thing, but today it's a vastly positive thing if you're in the businesses that we're in. Inflation has taken construction costs up, probably on average globally. If we look across all of our countries and markets and products, it's probably up 25 to 30%. And what that means, it doesn't. Some businesses it hits it right away positively. Some it doesn't hit it until later because your cash flows are locked in. But what it means is either you have a huge margin of safety, the next person to build the next real estate or toll road or power plant is going to have to pay 30% more. And if they pay 30% more, it means the competitor is at a higher price. And therefore, for anybody with in-place assets, it's a very valuable thing. But so cost structures are up, and that just means globally, and this is part of, back to the first question, is inflation subsided? It isn't totally, it's going to be higher because we do have to make up for some of this. Now, some of those costs will come down, but there's no doubt it's going to be more than we had in past, which has been our issue for a long period of time.
I agree with Bruce Flatt, of course. I think Brookfield stock will go through a rough time during this high interest rate environment, but on the other side of this environment and after a potential recession, I think Brookfield will be in a great position to profit from this financial turnover as the cash flow of their businesses and assets will adjust with the inflation. They actually should be able to buy great assets at bargain prices during this recession as they have lots of capital available to deploy. And then the global inflation can help them to realize the value of these assets over time. Okay, the last part of the video is about super investors who bought Brookfield stock during the last quarter. And this list includes famous investors like Mohnish Pabrai, Akre, and Josh Tarasoff. All of these three are amazing investors, and I'm always excited to look at their moves in the stock market. And here I'm more interested to see what they think about Brookfield Corporation. According to the recent 30th filings for the recent quarter, Josh Tarasoff, who ran a fund of over $200 million, added 65,000 shares of Brookfield Corporation to his portfolio. I really like Josh Tarasoff and always follow his portfolio. He actually has a very concentrated portfolio, consists of almost 10 stocks at the moment. And Brookfield is now his second largest position with a 14% weighting in his portfolio after Amazon. What is more interesting for me is the fact that he actually trimmed all of his position in the last quarter except Brookfield. He clearly sees value in Brookfield. He reduced his stake in Amazon and Google. He significantly trimmed Salesforce, Shopify, and Netflix, but he added to his Brookfield position. He actually consistently was a buyer of Brookfield Corporation stock for the past couple of quarters. Overall, I think Josh Tarasoff thinks Brookfield is undervalued here, and that's the only explanation of why he's buying Brookfield while selling and trimming other positions. Next, we have Akre, who is another legendary investor with a great track record of beating indices in his career. Akre is known as an investor who really cares about the management team of companies he invested in. He spent significant time to study the CEOs of each company he owned and wants to make sure they care about the shareholders' return over time rather than their own benefits. If we look at his portfolio, he also has a relatively concentrated portfolio of almost 20 stocks. And in the last quarter, he pretty much trimmed most of his position, while Brookfield was one of the few companies that he actually added to his position. In fact, Brookfield was his largest buy during the last quarter, which show you again that these super investors are really seeing value in Brookfield stock. Finally, we look at Pabrai Investment, which is Mohnish Pabrai investment firm in US. And he bought 532,000 more shares of Brookfield Corporation during the last quarter. If we look at his public portfolio, we can see that Brookfield is now 18% of Mohnish's portfolio after the recent buys. He also bought a little bit of Brookfield Asset Management, which is a subsidiary of Brookfield Corporation. Of course, this is only the publicly available part of his portfolio, and we know that Mohnish has a large stake in companies in emerging markets like Turkey, South Korea, and China. I will finish this video with a short clip from the recent interview of Mohnish Pabrai, where he discussed his investment in Brookfield and answered to a question regarding why he prefers Brookfield over Blackstone or KKR as an private equity or asset management business.
Why Brookfield over, say, a Blackstone?
Yeah, so I think you could probably buy a basket of these and do well. I think if you bought Brookfield, Blackstone, Apollo, all of them, if you just put them all in a basket and bought them, they would all do well. I think Brookfield may do better than the rest, mainly because of the DNA differential between them. So if you look at KR or a Blackstone, they come from a private equity world. If you go back to the history of the original funds and deals and whatever, it was a classic LBO private equity type starting point. Brookfield's starting point actually goes back a long way, several decades. And they really were not a manager of other people's money. They were really investing their own money. And then Bruce Flatt came on the scene and became CEO maybe more than 2 decades ago. He got rid of all the businesses which he didn't think were that high quality. They were in a bunch of mining and different things. He got rid of those businesses and he focused on extremely high quality, long-lived infrastructure assets. And the private equity world, generally speaking, because it's so competitive, has not recently and even historically has had very high filters on the quality of the business. They always felt that they could buy a mediocre business, do some financial engineering, and still make a good return. Brookfield didn't take that approach. Their approach was that at the core, they want to have a great asset. And then later they want to look at how they can finance and do other things with it to make it great. So I think the KKRs and Blackstones of the world have moved towards Brookfield in the way they think about it. But I think that when I look at just long-term DNA of how these companies think, I just think that Brookfield just from day one had the right DNA.
There you are, guys. I hope you enjoyed the video. And if you enjoyed the video and my coverage of Brookfield Corporation stock, and if you're interested to follow the contents related to Brookfield and other Canadian companies, consider subscribing to the channel to see similar content. Thank you for watching, and I hope to see you guys in the next video. Farewell.